So Deloitte does an annual study, which we call the Resources Study. We started in 2011, and it was a joint project between Deloitte and Harrison Group, which is a YouGov company. And what we wanted to do was to look at customer attitudes, both businesses and household consumers, around their attitudes and behaviors related to energy management. And we started the study in 2011 because many of our utility clients saw their supply really hit and reduced. And they think the assumption was it was because of the recession, and that when things bounce back, electricity demand would bounce back. And we wanted to kind of test that theory and see what was happening. So it's a national survey. We survey more than 600 business decision makers responsible for energy management in their companies. They have to be greater than 250 employees. It's across all industries, so it's technology, media, telecommunications, healthcare, financial services, and consumer industrial products. The consumer side, we survey 1,500 primary or shared decision makers for utilities in the household. The survey was from March of 2015. We issued the results, early summer, and we'll be headed this spring to another survey. So I'm going to really dive more into kind of the business survey, but I will touch on some aspects at the end related to consumers. So here are some of the highlights: is that we see that energy management's past a point of no return. So originally, when we did the survey, cost cutting was the major initiative or the major driver for energy management. But over the years, we've seen that change, even with the economy, bouncing back. So businesses, we think now see it not just as like a core competency, but really essential aspect of their corporate strategy. And we don't think there's any, turning back. 79% of businesses view reducing electricity costs as essential to staying to a competitive advantage, and 57% have formal energy reduction goals, and this is up from 46%, and that should say in 2014 there. And on average, businesses have a goal to reduce their energy consumption by 25%, and that's been pretty steady over the years. 52% of companies see themselves as as feeling good about their accomplishments. They think they've been extremely or very successful. Again, an increase from 2014. And 93% of businesses say they have invested funds in energy management programs over the last 3 years, and they're allocating more capital to energy management, about 17% of capital budgets versus 12% in 2015. So a lot of numbers here, but we thought it was important to kind of look at the differences year over year. So here's really what's driving the motivations behind energy management. Up at the top row is definitely desire to cut costs. That's still at the top, but we've seen other things kind of bubble up and become a little bit more prominent. That's internal motivations, including employee motivations, executive mandates, and also betterment of the corporation. And then again, competitive advantage is still pretty prominent up there. And again, we don't see any indications that businesses are going to kind of step back at all here. Even with growth expectations, they're going to continue along this path. So we really wanted to be able to identify kind of where businesses stood on a capability maturity model. So not all businesses, are advanced. Some are at the beginner stage. And so we've looked at basically 8 categories here, and the questions in the survey are framed around these 8 categories. And we found that the results or the answers that businesses provide to questions in this area is highly correlated to where they are in terms of maturity. So, we can identify based upon where a company responds, whether they're basic, engaged, or advanced, or leading. So it can help companies, actually in businesses determine, where they are and then what they need to do in comparison to get to the next level up and increase their game on energy management. So I'm gonna dive into these different categories. And there's lots of numbers here. The deck will be available later. We also have a report that, I can get you can find on Deloitte.com that, lays out all the results here. So we do see a link between energy vision and business strategy more clearly than we have in the past. So on the upper left, there is a documented, 52% of businesses say there's a documented corporate energy vision or mission that fully aligns with the corporate vision. And then on the right-hand side, top row, energy management is a key element of corporate strategy. Leadership and staff at all levels have energy objectives incorporated into their goals. So again, we've seen big increases in both these categories year over year. I would say year over year, we do not necessarily survey the same companies. It's a confidential survey. There could be some of the same businesses that respond. So that's one factor that's in here, but we consistently see kind of gains in some of the data here. I mentioned this earlier. We saw a sharp increase in the percentage of businesses that are reporting formal energy management goals. So it's now 57% of businesses say they have formal energy management goals. As I mentioned, on average, the energy reduction target is 25%. They have a goal of reducing their consumption by 25%. We also look beyond energy management. We asked about kind of other resource goals. So natural gas, carbon footprint, transport fuels consumption, and water. And so we've basically, electricity has kind of stayed pretty much steady. We've had some bouncing around of some of the businesses in terms of the percentage of them that have goals in other areas. But between 2014 and 2015, we did see some healthy increases across the board in terms of the companies who are setting goals in other resource management areas. So I talked about this earlier. Companies are allocating more time and capital towards their energy management targets. So between last year and this year, we saw a 5 percentage point increase in terms of the amount of total capital budget that was going to energy management projects. So it went from 12% to 17%. I think also quite interesting is on the right-hand side, you'll see that they're actually now giving themselves more time to reach their goals. I don't think that was necessarily a surprise to us. I think the fact that, kind of maybe the low-hanging fruit is done and taken care of in terms of lighting and other, more basic tactics. And now for them to continue to reach their goal and move along the spectrum, they now have to spend more time and therefore, and more money to achieve some of their goals. And maybe they just had a little bit of their blinders on when they kind of first started down the path. Another area we saw a big increase was related to on-site generation. So 55% of businesses now report that they have some form of on-site generation, up from 44% in 2014 and 33% in 2013. Interesting to note that renewables supply about 13% of that on-site generation, expected to jump from up to 16%. I think this isn't a surprise as we hear more and more about businesses who look to supply from renewable energy. Tim mentioned quite a few, but there is, kind of Lego said by 2020 it wants to be 100% renewable. More and more you hear companies that are, putting that stake in the ground here, and so we expect that to increase more. Now, it is interesting to note that there were differences here among industry groups. So telecom, media, and telecommunications have more on-site generation than, let's say, financial services. So 60% of TMT companies had on-site generation, and also healthcare was up at 65%. I think it's reflective of the nature of their services. They can't go down. If they lose a data room, it's very valuable. If you have a hospital and you go down. So wasn't necessarily a surprise to us. And obviously there was a panel earlier with Cable that was talking about all the things they do in terms of looking at fuel cells and other opportunities for their energy management. So here we looked at performance measurement and management. So, and this one we chose to look at kind of by size of annual revenue, small, medium, and let's say large companies. And so companies of all sizes are really gaining maturity in measuring energy management performance, and maybe that's because of companies like Urgent and others who are helping them in that area. But large companies with greater than 500 million in annual revenue is really leading the charge. But overall, 41% of companies that are measuring performance across functional areas against their goals and KPIs, and that's up from 31% in 2014. And also on the bottom here, a greater percentage of companies are also reporting that all of their energy management projects adhere to a rigorous measurement and verification methodology, and that 34% was up from 25% a year ago. In terms of overall, in terms of demand and operations management, we find that energy performance is increasingly factored into operations planning. So companies are becoming more sophisticated, incorporating energy management into different aspects of their businesses. 35% of them on that top row model their operations to account for energy management performance across a range of scenarios, and that was up from 28% a year ago. And more companies are report participating in demand response programs. In fact, 29% of them say they participate in all available programs, and 1/3 indicate that they participate in these programs somewhat. So we do know, kind of more of our utility clients are looking at how they can work more closely with their large customers in terms of helping them meet their goals. Partly they're, in some cases, as Tim noted, they're, forced to in terms of energy efficiency mandates by the states, but other utilities are also saying, hey, our demand is decreasing, there is more competition for our consumers, and how can we work better with them and continue to develop a long-standing relationship, and what other services might we be able to provide them, or how can we work with them in order to continue to generate more revenue for ourselves as a business and keep our customers happy. And I think, here, let me see, sorry, I think we're done with that. Okay, so here we are. So this is related to supplier and contract management. At the bottom of the chart, you can see that 34% of businesses have KPIs in place for all energy-related suppliers, enterprise-wide. We didn't see, huge differences here between large and smaller companies, but again, still, larger companies, are definitely leading the charge in this area. And we do still think there's room for improvement, though, because only 4 in 10 companies report having KPIs in place for all energy-related suppliers, and that could continue to change over time as businesses start to evolve in this area. Companies are monitoring energy spend more closely and taking greater advantage of incentives. 38% of them say they track all corporate entities and energy types on a monthly basis, so they're gathering more data, they're looking at that data with the help of, either internally or the help of others. And we notice, they're really not leaving as much money on the table as they previously said in the past. So they're more active in tracking tax incentives and tax credits for renewable investments. This may be because now they're more active in this area in terms of implementing alternative energy in their portfolio, and also maybe the just greater familiarity with those incentives. So now we're going to move on to governance and culture. I think here employees are, kind of slowly embracing the merits of energy management. I think we talked about this, it was alluded to earlier earlier today in the morning session in terms of, how many people or how a company really overall embraces the opportunity there. And we see companies still facing challenges in gaining employee buy-in, although the practices are really becoming more ingrained, and rewards are more aligned with overall energy management goals. 60% of businesses indicate having difficulty gaining acceptance and participation from their employees regarding resource management. However, there's been progress in this area. 34% now report that their companies have corporate programs for employees at all levels, up from 28% in 2014. And we saw a similar increase in terms of energy management employee compensation. Consistent with other maturity levels, more companies are using advanced analytical tools or are focused on quality and visibility of energy data. So I think this really kind of hits on a lot of the conversation earlier this morning. 28% of businesses say high-quality energy data and data management exists across the company compared to 22% in 2014, although that's still a pretty low number. Similarly, 27% report advanced analytical tools are employed across the company, up from 27%. And they're increasingly thinking of off-the-shelf software to help them in terms of their efforts, but in some cases it's missing the mark. 64% agree or strongly agree that smart technology designed to help reduce electricity consumption is not that effective for their company's circumstances, compared to 58% last year. And more than half think the technology available today is inadequate to be very helpful in managing their energy, their company's electricity consumption. So that's pretty insightful. I think a lot of them tend to look for customized platforms, and you're not necessarily going to find one size does not fit all, but I think that's pretty interesting in terms of where we were, where the discussion has gone, today. Certainly there are a lot of options out there. Maybe they haven't found the right one, or don't know where to look for that option. So I'm just going to highlight just some of the consumer survey results here. In terms as opposed to businesses. While businesses showed some significant shifts, we think in terms of their energy management, consumers have kind of stayed pretty steady in terms of their attitudes and behaviors. Consumers worry a little less about their electric bills, but they don't expect to use more electricity in the future. And so kind of the lessons that were ingrained in them in the recession when they really started their reduction efforts are really entrenched. And although they are taking steps to reduce consumption, many who had intentions to do more or said they were going to do more haven't necessarily done that. And more consumers are receiving tips on energy savings, and through social media has really been more prominent source in this last year versus previous years. Consumers are expressing increased support for renewables, not so much to save money, but to kind of do the right thing. And we saw this both from a perspective of solar and wind. So 64% of consumers rank increasing the use of solar power among the top 3 energy-related issues most important to them. And that was up from 58% in 2014. Consumers are more optimistic about U.S. energy resource abundance, and their desire to end U.S. dependence on imported oil is strengthening. And they view the information in their electricity bills as more trustworthy than in previous years. Maybe they understand it better. They're reading it more clearly. Maybe the messages that are being communicated are different, but they find it more trustworthy. And interest in sourcing other services from their electricity providers rose sharply. We asked them, would you want to get cable from your electricity provider to see how open they were to other service providers? And they said, they'd be happy to get more from their electricity provider. So 80% here on the left, 80% of consumer respondents said their families took steps to reduce their electricity bills over the past year, and this has really been steady year over year between 2012 and today. In addition, 65% of them expect to use the same amount of electricity this coming year than they did last year, and 25% actually believe they will use less. And on the right-hand side, 64% of consumers agreed that our family is already doing everything we can to keep our electric bill down, so there's not really anything else that we can do. But on the flip side of that, that implies 36% of them can actually do more. So in terms of energy saving tips, they're receiving several good tips on saving electricity. That's increased over the years. So 31% of them now say they get several good tips versus 24% a year ago. And 67% say they got those tips from their electricity provider, up from 58% 2014. And social media was a huge jump there, second from the bottom on the right. 28% of them received tips versus social media versus 19% a year ago. And no surprise, members of Gen Y are more likely to find social media to be a useful source of information, with 39% stating they've received good tips around energy management through their social networks. By the way, the Gen Ys who responded to the survey were ones actually paying their bills. So they weren't pilfering off their parents. They actually were a bill payer. So just an interesting note. So lots of numbers on here. And I thought I included a slightly different slide. But what we did here was trying to find out what household consumers are doing around energy management. So as in past years, they're doing the basics, right? They're shutting off electronics when not used. They're setting their thermostats a few degrees lower in winter and higher in summer. They're replacing older incandescent light bulbs when they burn out and putting compact fluorescents in. But even though on the right-hand side there, you'll see that consumers have said, well, I'm going to do more in the future, right? There's other things I'm going to do in the future that are actually more capital intensive and more time consuming, such as insulating their homes, replacing their old appliances with new energy efficient ones, or replacing windows. They said for years, yep, we're going to do that, we're going to do it, we're going to do it. Well, what it shows here is that they actually haven't done what they said they were going to do, which to many is not a surprise. For instance, if you look at the better insulating their homes, 47% of them said they would in 2014. That's one of the top 5 future things they would do. And the point is, it's the proportion of respondents who say they are currently doing that hasn't gone up. So it's actually gone down. So only 40% of them are doing that now. So again, as they say they're going to do more, consumers aren't doing it, as we've seen businesses really kind of acting on their goals. So in terms of a wrap up, what does this mean for businesses? We think businesses have moved up on the maturity curve. Over time, we've seen more companies kind of move into that leading category and move up from basic, enabling, and all of that. And that has also been because they're deploying new technology management tools and new technologies to achieve their goals. With a foundation laid, we don't think that the pace of changes, we think it will accelerate. And so this gives businesses maybe an opportunity to hopefully drive their agenda in terms of getting more capital and getting the CFO and the energy management leader on board in terms of what can we do in the future. We do think it's important for businesses and those people who are trying to help and work with businesses to understand where they are on that maturity curve, so they can figure out what the best path is forward and how to communicate the right message to leadership to be able to move along that scale. And the maturity scores will kind of really help a business identify what their strengths and weaknesses are, and again, what they need to do to kind of, leverage their position and move up on the maturity schedule. And we think that business as usual is really no longer an option. There's going to be much more, competition between businesses in terms of how can we continue to improve in our energy management area. So what does this mean for electricity providers or utilities? maybe they need to kind of re-segment their business customers and really understand, where they are from an industry perspective or maturity level, and figure out how they can provide customized energy solutions. And maybe if they can't do it themselves, who can they team up with in the market to help them provide those services to their customers? And it may require new business models for utility in terms of, okay, what services are they provide, in terms of on-site installation, maintenance, or, what services can they provide through others in the marketplace. And then consumers, on the consumer side, although they are increasingly aware of provider messages and they've shown an interest in some new products, they really they've hesitated to act. But social media and online campaigns may help move them off the dime, but we'll see about that. And especially we think younger generations are going to be interested in that.